getting these spot ETFs from Fidelity and from BlackRock, because these institutions control over $15 trillion of wealth control. They oversee over $15 trillion of wealth for their investors. And why are they doing this?
Vailshire Capital Management's James Lavish gives us his update for the crypto market and why we're going to see a massive surge in price for Bitcoin very soon. Lavish explains that while speculators initially drive price movements, giants like BlackRock have entered the market and shifted the cycle by pushing prices to the increase we've seen just in the last week alone. He also points out that historical trends indicate a parabolic increase in market cap in the coming months. As we near the Bitcoin halving in March of 2024, Lavish provides insight into why, realistically, we could see a $70,000 price per Bitcoin by January. With real money now flowing in, he emphasizes that the crypto market has become more significant than ever, and institutional investors are driving the price of cryptocurrency that will yield massive gains in the next 3 months. Let's get right into the latest interview with James Lavish as he gives his prediction for Bitcoin and the crypto market. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now. Don't forget to share your thoughts and comments down below. Let's get right into the video.
Well, over the last 12, you can look at the charts of Bitcoin. It is super volatile. So I don't ever. Okay. So we have to look at where you are. If you're in a place like Venezuela or Argentina, it may have been very valuable for you to be in Bitcoin. Okay, depending on when you bought in. And if you're here in North America, if you're in the US or Canada, and you have a lot of cash, well, part of your strategy, which should probably be, and everybody's different, so everybody has to do their own investment research and work with their own manager. But if you have a lot of cash, parking in short-term treasuries, they're not going to default on those, and you're going to get some sort of yield on that. You can park some there waiting for opportunities as volatility comes. And if we have some sort of credit event where all assets correlate to one, and you have a V drop, a drawdown, well, that gives you an opportunity to add to those exposures. But to your point, Bitcoin, I would not put all of my excess cash in Bitcoin because it's too volatile. And that is why I also own gold. I know that gold, as volatile as it has been, it's nowhere near the volatility of Bitcoin. So you can actually have a stable asset there, and it will protect value over time. And even though it won't be in 10 years the same kind of protection as Bitcoin will be, it will be better than having US dollars, in my opinion. The US has had a history of banning hard monies. It banned gold. It seized gold 100 years ago. I do believe that it would be difficult to do the same thing in this day and age. In where we are now, I believe it would be difficult, and just the nature of Bitcoin, it would be difficult. You can't ban Bitcoin across the world. There's tens of thousands of nodes and miners across the world. There's no way that they can just shut it down. I think we already have enough of a voice that it wouldn't get through. So what you're talking about is important. It is very important for Bitcoin to get some legislation around it where we have some clarity on exactly what the rules are going to be, and it's completely separated from everything else. I think that's very important. I think a huge step toward that is getting these spot ETFs from Fidelity and from BlackRock, because these institutions control over $15 trillion of wealth control. They oversee over $15 trillion of wealth for their investors. And why are they doing this? They're doing it because their investors are demanding it. That's why. They're not doing it because they think they're going to go and buy a bunch for their own balance sheet. They're doing it because their investors are asking for it. They see an opportunity in the market. And I don't believe they would do that without being a very strong voice for a positive resolution around any kind of legislation that was put forward.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lavish says this is just beginning. Comparing the initial years to the current widespread interest and investment with a giant spotlight on Bitcoin ETFs, he highlights this being a significant development in the financial ecosystem. He believes that BlackRock and Larry Fink will lead the charge in obtaining regulatory approval for a Bitcoin ETF. Lavish believes this will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
Well, I don't think there's anything that really is that in reality can compete with it. It's been compared to gold quite a bit, but Bitcoin has some facets that gold just couldn't have. It's not easily transferable. Bitcoin is. It's not, it's not easily transportable. Bitcoin is. You memorize your 12 or 24 seed phrase and you can take it anywhere with you in the whole world. You could go to Mars with it. You can't do that with gold. It's very difficult to seize. If you know your phrase, it's difficult to seize. So it just has properties that gold doesn't. I would say it gets compared to it a lot, like it's digital gold, but to me, it's far better. I've thought a lot about this. Bitcoin's a technology. I come from the institutional world, institutional trading world. And I believe that it's become correlated, not recently, but over the last 2 years, up to the last few months or last month or so, when Bitcoin kind of broke away because of the ETF enthusiasm. But before that, I believe what happened was it's been looked at as like a technology. And so it's kind of grouped into that technology world. And so it is a risk on asset to those investors. That's the way they see it. They see it as a risk on asset. Even though if you truly understand it, you'll understand that it's perfectly risk off. It's actually better risk off than even bonds. But the issue is that it's been seen and analyzed and been traded in that world primarily up until now. That's why I fully expect for there to be a higher structural inflation than they admit to. And that way the GDP, the fake productivity, the nominal GDP will be higher than the real GDP, much higher. Because as those deficits grow and the interest expense grows, you're going to need higher nominal GDP to pay for that. And so I expect, even though we're going to declare victory on inflation being somewhere around 2.5%, I believe it's going to be closer to 4, 5, 6% in reality. Running deficits is actually inflationary. You're pumping money into the market that you don't really have.
Lavish anticipates that the crypto summer will continue its parabolic run until June of 2024. As we stand on the edge of the winter months, the crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. His outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. Lavish sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin to an unbelievable $100,000. What do you think about James Lavish's prediction for Bitcoin, the crypto market cap, and the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.